Welcome to the Market Enthusiast podcast, where Good Life's Noah Brooks, Chief Market Strategist, and Chris Needs, Senior Research Analyst, break down today's topics, covering their impact on the economy and personal finance in a fun, easy-to-understand way for investors of all levels.
Welcome, everybody, to the Market Enthusiast podcast. I'm Noah Brooks, and obviously with me, Chris Needs.
Hello, hello.
Hey, we just had Halloween. What was the scariest thing for you for Halloween?
Ooh, I don't know what was the scariest. My son was dressing up as like a American soldier, and then he ditched it last minute because he didn't like people were saluting him.
Oh,
he's like, I don't like it. You know, and he switched up real quick. He went into he said it was Godzilla, but it was really just like a dinosaur.
Seems like
reptile.
He's not respecting the military, Chris.
Oh, he darn well better.
So I brought up Halloween. I'm a big candy guy, but this year I'm trying to not eat it. So obviously I brought all our extra candy into the office so you guys can eat it, or other people other than me can eat it. Yeah, that's one of those things that I need to get away from.
I've been trying to dodge taking the kids' candy this year as much as I can. I think I've only taken like 15 pieces. Normally it's much worse.
I had some Skittles today. They were good. So let's start with some elections, right? So here we are. It is the beginning of November. I brought up Halloween. What do you think Jamie Dimon thinks the scariest thing about Halloween is?
I think that he got a socialist mayor in New York City, the bastion of capitalism.
Yeah.
Just finished that $3 billion building, and now he's has to work with a socialist.
So a self-proclaimed democratic socialist.
What's the difference there? What's just adding democratic make it better?
Yeah, I don't know. I don't know if there's any actual value to putting those two words together from a standpoint of what is believed. I'm sure if I asked the internet, it would tell me. I know that, I think he won. First off, Cuomo, there's some baggage there. The other guy, the guardian angel, I don't know that he's
Sliwa.
Yeah, he's an interesting character, but I don't think there's a lot of legs with him outside the vigilante crowd.
Law and Order.
Yeah, something like that. And then you have this younger guy, I think he's 34, 35, who's talking to the youth of New York. And I don't necessarily mean the youth of people in Manhattan. I think you pointed it out that he won large majority from the other boroughs.
Yeah.
Not Manhattan, and I'm not.
He's younger than me, and he's going to be the mayor with no prior experience to the mayor of New York City. It's pretty amazing. What an ascent!
What is his experience?
I have no idea. No idea.
I mean, he's going to become experienced real quick.
Yeah.
Right?
I mean, people are going to step in to help him. Obviously, everybody wants the best for the city, whether they agree with him on everything or not. But yeah, interesting. I hope he has a good team around him.
He's going to have to.
Yeah.
I mean, that's a big job. Does the mayor of New York City, how much does he or she impact the daily lives of people that live in the city?
I mean, they kind of already had a socialist. I would say Bill de Blasio was pretty darn close to a socialist. But, I mean, I think most of the tax raises have to be approved by the governor. Kathy Hochul has expressed in the past she does not want to raise taxes on just the wealthy per se. I don't know everything behind that, but she signaled that. So he's going to have to work with them a little bit. He has some ambitious goals: free childcare, universal childcare, free bus transportation, some of those things, which will definitely require some funding.
Well, I mean, we live in
rent freezes as well.
Yeah. We live in the sticks comparatively to New York City. I mean, I enjoy being a tourist there, but it would be difficult to find a place to live. And honestly, I don't travel to the other boroughs like Manhattan itself, the island. And I go there as a tourist, as millions of other people do every year. But I couldn't imagine having to try to find, especially as a young person. I mean, it's hard enough here in Pennsylvania to try to find a starter house in Manhattan. Like, that's not a thing, right?
Yeah, I don't think so.
You got to be a millionaire to buy a 1-bedroom, if I'm not mistaken.
Yeah.
Seems that's a little bit scary. And that's probably why he won, right?
Mm-hmm.
I think we were talking about it, rent controlled apartments, and the idea of rent control kind of decreases the mobility, right? Because nobody wants to leave.
Yeah. So, I mean, it's a double-edged sword. Like the people who are in the houses get that rent control. They don't get the annual or biannual, increases. But it's a double-edged sword because then you have people who own the properties. They're not going to put, $1 million into those buildings for upkeep if they can't increase their rent. They're not going to build new buildings and, do that kind of stuff if they're capped at what they can charge. And like you said about mobility, those people, they can't leave those prices because the prices are insane. There is an affordability issue in the cities. Everyone's aware of that. And then people who want to come in, maybe they get an awesome job. They get hired in that new beautiful JP Morgan building and they want to move into Midtown or something like that. And there's no houses for them because no one will leave their houses. It's, we were talking, it's similar to like myself being stuck in a very low interest rate house, which is amazing. But if I wanted to move, it's going to be
costly.
It's going to be tough.
Yeah. There's no question about it. Well, so hopefully you don't have to move anytime soon, and maybe rates will come down a little bit. It doesn't seem like they're moving too much lower. They're still in the low sixes, 6.26 or something like that today. And we're sitting here in the beginning of November. Obviously, we just had this election that we've been talking about. October was an interesting month. A little bit bifurcated. We had some large caps that outperformed. The NASDAQ was up almost 5%, I think 4.65 for the month. But you had small caps that were down for the month, mid caps that were down for the month. Value was up maybe 0.5%. So it's still these same companies that are moving. And obviously having a little bit of a pullback today, maybe 1.5% at the lows. It seems to me there might be a little shift in investor sentiment, though.
Yeah. Like you said, with how bifurcated it really is, those top 10 companies, which make up about 40% of the S&P 500, they're performing and, the averages don't look terrible per se. But underneath, there's a lot of companies not doing well. You mentioned small and mid caps. So there's going to be a lot of days where the index doesn't do much and everything beneath the surface looks rough. Like the breadth isn't that great. And alternatively, in the future, we're going to inevitably have days where the underneath companies, the other 60% do well, but those mega caps don't perform. And then the index looks like it's awful.
You won't notice it, right?
Right.
Yeah. No, I mean, honestly, like you won't notice it if you're just looking at the S&P. You look at the other indices, you'll probably see it. But I mean, you can have 300 companies in the S&P 500 go up a full percent, and you just need 10 of them to go down 1%, and it wipes all of that out plus.
Yeah.
And it still ends negative for the day.
Mm-hmm. We're in the midst of earnings season, so it is an exciting time. I jotted down some numbers here that I thought were just very notable. So earnings season has been largely good. You had some stats on that.
FactSet reported 83% of the S&P 500 companies reported earnings surprise. 80% of them have reported a positive revenue surprise, and that's only about 65% have actually reported yet. They're still coming. So that's really positive. What I don't have is the data on how much of that is represented by those big names, right? The top 10.
I have a couple of the big names here.
Yeah. Let's hear it.
So I'm just going to emphasize like the scale we're talking about here. So Google, their first $100 billion revenue quarter.
Wow.
Big number.
Yeah.
Microsoft, $78 billion in revenue in the quarter. Amazon, $180 billion in the quarter. Stock really jumped. AWS didn't slow down as much as, they were forecasting. So they obviously have a dominant market share, but it's been slowly bleeding away. We didn't see that quarter, so they really jumped and popped off that. Meta, $51 billion in revenue in one quarter. They did have a one-time tax charge of $16 billion, which is just a one-time thing. Really hurt their profitability. And then Zuckerberg has totally done away with the year of efficiency from 2 years ago, and they're doing massive capex. Their stock slumped on that.
How much of that Meta revenue is from advertising?
It's got to be like 80% of it.
What I mean, I'm not a Facebook guy, but other than capturing maybe a portion of sales that are sold on Facebook, like
there's that much ad revenue on there. Do you ever just talk about something and then boom, it's popping up in there?
Yeah,
they're listening.
I don't like that.
They're selling that right away, selling your info.
I don't like that one bit.
Yeah,
I don't like that one bit. I think the big difference between some of those companies that you talked about is you said 151 billion for Amazon, and Google just had their first $100 billion
quarter,
but the profit margin on an Amazon versus a Google is pretty
very
spectacular.
different. Yeah,
really different, right?
I think Amazon's was about 11 to 12%. I think that's what their profit margin was. I don't have it jotted down here, but Google is higher than that. Obviously, they have the low margin business on retail, where they're basically almost like a third party seller now, and they just own the marketplace and take a little slice. AWS has good margins.
Oh yeah, no question about it.
But that's being balanced out by their more revenue, done on the retail side.
Yeah. So we're everybody's looking for information, looking for data to try to figure out what's going on in the economy. And we are now on day 37 of the shutdown. So tomorrow, Friday the 7th, we should be getting the jobs report. And it's not happening.
Mm-hmm.
So everybody's, got their microscopes on and their binoculars out and trying to ascertain what's going on from an employment standpoint, let alone all the other data that we've missed. So this week we've had the Challenger jobs report come out, which showed layoffs. Now it doesn't aggregate everything. It doesn't show how many were added and how many were taken. It just shows the layoff number. It was essentially 159,000 layoffs were reported in October, which is up 177%. I mean, it was 55,000 last October. So, some of that is bleeding over to today's market. We don't, you don't know what is going to happen even at the end of the day, let alone tomorrow. But I think the more of that type of data that comes out, you're going to find that sentiment shift maybe a little bit higher, because the big tech names can still have tremendous earnings. But if we're losing jobs, if the total number of people in the United States or the total number of employed people is going down, that's probably not a long-term positive.
Yeah, labor participation has been trending downwards a bit. We were recovering after COVID for a while, and it seemed to turn the other way. I was hoping it was going to keep going up and get back to where it was, but we're trending back down on labor participation. And you see all these other jobs. Well, I don't know if we'll call them middle manager type jobs, or maybe middle consultant type jobs, white collar jobs, where think about what's going on in DC and everything, where they're utilizing more softwares rather than consultants. Now you're seeing a lot of them lay off what are, by all accounts, probably high compensation jobs. So it's hitting multiple areas. It's not like just lower income people are getting hit on layoffs. It's also hitting the middle section.
Yeah.
Amazon was laying off a bunch of middle managers, we'll say, or corporate jobs.
Yeah. What, 29,000,
27 or something like that. Yeah.
That's a big number. Now, as a percentage, I don't think it's a big number, but it's still on the aggregate, it's a big number. So I said we're in day 37 of the shutdown, Chris. What do you think it's going to take to get this resolved?
They have to either promise that they're going to, in good faith, negotiate, but there's no trust anymore. There is no trust. So I think they're just going to Republicans are going to have to give up some dollars and fund ACA subsidies for some amount of time that will appease essentially Democrats, and then maybe they'll come and sign the CR. But we're running out of time on the CR. Like it's only good for like another 2 weeks or something like that, even if they signed it now.
Yeah.
So
it seems to me, and I don't want to be too negative on this, but it seems to me that the Democrats are kind of backed into a corner. And what I mean is you have the Republicans that control both houses of Congress and obviously the White House. And so this seems to be one of the last muscle flexes that you can have on the Democratic Party. I mean, they're kind of clinging to any power that they have. And quite frankly, they're, the White House is a freight train moving along at a really big clip. And so if this is one of the few remaining power positions that they can take and leverage points that they can take, there's 53 Republican senators and only 47. So they need 7 Democrats to vote with them to really do anything with the filibuster at 60 votes. We could talk about that in a second. But so this seems like, I don't want to say a last gasp, but it's over these ACA Affordable Care Act subsidies that were put in place after COVID or shortly after COVID, which equates to roughly $41 billion a year. It's a lot of money to you and I, but it's a rounding error to the federal government.
Yeah.
But it's really a sticking point. So, I mean, we gave $20 billion to Argentina the other day. $41 billion. I don't know. It doesn't.
And it would be staying here at least,
Yeah. So I think something's got to give. I mean, I said the last time we were sitting here, the reason that the last shutdown ended was because travel got all sorts of discombobulated. And TSA workers were calling out. And essentially, when the American public is trying to travel, and you see lots of lines and flights canceled, I mean, that just people start maybe calling their elected officials. Now, I just came back.
You didn't have any issues.
I didn't have any issues. I flew down to Orlando and back in a matter, stayed 2 nights. Philadelphia airport on Monday, 4.5 minutes in TSA line. And yesterday around 4:30 in the afternoon, so Wednesday afternoon at Orlando, I was literally the first person in the TSA line.
That's wild, because I feel like Monday morning you would, or did you fly out Tuesday morning? No, you were out Monday morning.
Monday.
You would think that's when business commuters are going. I know business commuters.
It was Monday afternoon.
Oh, okay.
Monday afternoon. But there was nothing going on. Philadelphia airport, easy peasy. Orlando airport, which in my experience, I've had a lot of wait times at TSA in Orlando. There's nothing going on. Now, I did have a little bit of a kerfuffle yesterday. So
he wouldn't tell me this before the podcast, so I'm going to be I'm interested to hear this.
So the flight was delayed. There was something going on. The incoming flight was coming from LA. So we were delayed maybe about 40 minutes. I had a Zoom call, and I don't normally make Zoom calls at 8:00 at night, but there was something important that we had to get done. And I told them that I would be late, and I get on when I got on. So it was yada, yada, yada. I leave the airplane. I go into the Philadelphia airport, and I thought, well, I'm just going to take it from here. So I'll just find, a gate where nobody's at, and I'll take it from here. So I grab the laptop, open it up. I get on the call. Call lasts about a half hour. So it's maybe like 9:15 or 9:20. And I'm wearing my Bose headphones for the call and grab my stuff, pack it all up. And I start walking out, and I call my wife, call Ailish, and I'm talking to her. And then I call one of the people that was on the call, and we discuss what happened. All right, no problem. I'm in the car. I'm driving home. I get home. I have my backpack. I turn around to grab my luggage. I left my luggage somewhere.
No.
I left. So I either left it on the plane, which I don't think is possible. I think more likely is that I left my luggage at the gate where I was on that Zoom call. And when I was packing up my laptop and putting everything away, I just grabbed my backpack.
Dude, they probably think that's a bomb threat. Like, they brought
So I called the
Homeland
airport.
Security's checking your bag out right now.
I called Philadelphia Lost and Found, and they were like, no, I don't have anything here. It might come. And then I called American, and they said, we'll file a claim. My Sonicare toothbrush is in there. Like, seriously. So yeah, that was interesting to say, to get home and not have my luggage.
What was the Catherine Bigelow movie with the bomb detonator?
Oh,
I'm just thinking of, who's it, Jeremy Renner, I think, going up to your bag.
yeah. So that happened. So
this guy was working on his laptop and then ditched his
and
bag.
then ditched my bag.
Suspicious.
Yeah. As far as the shutdown goes and TSA, I didn't see anything. That's, anecdotal to me, but obviously Atlanta yesterday, I think there was like 4.5-hour lines for TSA, and EWR Newark was shut down for a number of times in the last week.
Sean Duffy said they are going to, over the next couple of weeks, the head of transportation, somehow decrease 10% of flights at major airports. It's not every airport. But...
I didn't see Philadelphia was on it, but like the majors are on it. There was a list of 40 put out that I read this morning. I don't know. What do? They just say, they call up the airlines and they say, hey, we need to cut 10% of your flights. Like,
sorry, your gate's no longer open. We can't rent that to you. I don't know.
So I think this goes a little bit deeper, because this happens regularly when the government shut down. Not that the government shuts down regularly, but you're putting not just TSA, but you're putting people at risk from the flight operators, from the flight controllers. And it seems to me that they should do something a little bit different. Instead of it being a federal organization, I don't want it as a private organization, but maybe there should be like a nonprofit that instead of being funded through the government, it's just funded from a usage tax, right? Like, as people fly, that's what they do in Canada. And you would never have a shutdown of impact flights.
Yeah, like a quasi government, like Fannie Mae, even though they're about to go private now.
It's just a nonprofit, and there's a there's a head of it.
Think of like FINRA is like member funded.
I don't know. FINRA is kind of shut down, isn't it? The SEC, they're only doing
SEC is, but FINRA is a self-regulating authority.
Self-regulating.
SRO. Yeah.
Where does FINRA get their funding? From the trade transactions?
Member fees.
Yeah. Well, when you look at a comp firm, it always has the FINRA fee on there, right? I think that's where they get a lot of it. All our trades,
checks out.
All the trades they do go to that a little bit. But yeah, I mean, it's one of those things where there's real safety involved. The FAA shouldn't be impacted by our elected officials not being able to come.
They should be non-discretionary and get the money regardless.
Yeah. So that brings me to another thing. Did you happen to see the plane crash? This was not because of the government shutdown. I don't want to make any.
The plane never got off the ground. Yeah, it was like it
was in the air. It was in the air. It was a UPS plane, 31-year-old UPS plane. And there's this video. I think we can get it up on here. A video of the plane coming down and it's landing. There's an Amazon driver or a FedEx driver, maybe it was even a UPS driver, watching this plane come down in flames, and it looked like a scene from,
the clip I saw. I didn't even know it was in the air. I thought it was trying to take off and just never took off. But yeah, the fireball was insane. The video we were looking at, there was like a delivery worker in his vehicle watching the fireball come towards him, and then he finally ran. I'm like, I would have been out of there 15 seconds ago.
I mean, what are you going to do? You see this massive plane in front of you is probably only like 200 or 300 yards away. You said fireball. That's like the asteroid out there.
Oh boy,
3I Atlas.
It's kind of creepy.
It's interesting though.
I'm trying to ignore it as much as possible, but we have a lot of conspiracy theorists around us talking about it.
Maybe, yeah. There's no question about it. But what I'm seeing is that there's people that are going down a rabbit hole on social media over it, and even younger kids. I mean, 10-year-olds and 15-year-olds that are going down this rabbit hole. It's 260 million miles away. And it's supposed to bypass us completely. It's not even going to be close to us, and people are kind of going apeshit about it. I don't get it.
You watch Interstellar? They're just us from a future time, went through a wormhole, coming back to wave.
I worked with a kid 30 years ago that used to say aliens were actually us in the future coming back.
That's what I'm going with.
Interesting character. So let's go back to earnings for a little bit. We have valuations that we know are stretched. Earnings seem to be good. PE can always continue to go higher, but we were having a conversation earlier this week about not necessarily price to earnings ratio, but the margins.
Yeah. So when you're looking at price to earnings ratio, it only takes the current stock price and their current earnings, which any company can manipulate their earnings. I'm not saying manipulate like SEC fraud, but they reinvest in their business. So they control what goes through to net income and what they get taxed on. So if you actually look at either something like operating or free cash flow, or simply look at the profit margin and account for that, I was making the debate that if you adjust for the profit margins we're seeing right now, which are historically high, we're not nearly as overextended on a valuation basis as if you just look at PE alone. And I stand by that.
Yeah.
We were talking, then we went to the CAPE ratio, and I pulled some stats that we were debating. So the CAPE ratio is the 10-year cyclically adjusted price to earnings ratio. So they just smooth it out over 10 years. And over that 10-year period, the average profit margin was 12.3%. Very good. That is also historically high from what we could find looking backwards. Don't have a definitive stat to quote on like a longer term average. But right now we're at 14.5%.
Yeah.
So
higher margins.
Generally, if you're a more profitable business, this is an aggregation of companies, obviously, but if you're a more profitable business, you should probably get a higher valuation. Obviously, you have to account for expected future performance. But if we're just zeroing down and filtering down, looking at this snapshot of, well, we're 17% more profitable than we were, we should have some sort of premium on the valuation.
Well, don't you think we do have a premium?
We do. We definitely do. So my point was saying is, yes, we're certainly valued at a premium right now, but it's not as much as you think just looking at that P, which is a very simple measuring tool.
Yeah. It seems to me that all of these, the profitability of companies has gone up with innovation, with different types of innovation. And October, I don't know the day, but October marked the 200th anniversary of the Erie Canal, which now is used for kayaking and, houseboats or something like that, river boats.
Recreation now.
Yeah, recreation. But 200 years ago when it was opened, what it did was it really allowed New York City to become a hub. And so imports from Europe, instead of going all over the United States, they all came, not all, but about 70% of imports that came in at the opening, the first 10 years of it, came into New York City. And it was much lower in the beginning because it was spread out throughout the East Coast of the United States. And so instead of going to Baltimore, Boston, Philadelphia, Savannah, it all started coming into New York. And it really opened up and it made New York the powerhouse that it was. And that's transportation. Communication and transportation is that innovation that just allows things to move faster and have, let's say, higher margins.
Yeah.
I was looking at this and I was thinking, well, when was the first telephone call from the United States to Europe? The first call wasn't, let's say, a landline telephone, but first call somewhere around 1927, it was a radio call. And in those dollars, not today's dollars, but in those dollars, it cost $75 for the first 3 minutes.
It's a lot back then.
Yeah, a lot in 1927. The first actual physical line that was put throughout the Atlantic to connect New York and England or to London didn't take place until 1956. And it only had the capacity of 36 lines, phone calls at one time. Ailish's family obviously lives in England, and it used to be a really big thing to be able to get an international phone call, whether to make one or to take one. And now it doesn't matter. We're on our cell phones and it doesn't mean anything because we have this fiber going back and forth. It seems to me that all of these advancements in transportation and technology just makes the entire world more efficient and productive. And so is it possible that as the advancements continue, and whether this is, faster planes that are allowed to break the sound barrier, whether this is quantum computing and more information being around, is it possible that the profit margins, let's say in the S&P 500 or the Russell 3000, that they just continue to grow over time? Or is it an anomaly at the moment?
No, I think it's a trend we always been working for. As you mentioned, talking about canals and railroads and then cars and trucks, internet, so on and so forth. Human interconnectedness being more efficient has led to productivity boost. Same thing here when you're talking about chips, quantum, so on and so forth. We should become more productive, have more efficient usage of capital dollars with those tools. So realistically, I think it should continue to improve. I don't think there's like a line in the sand where it's like in 2050 we can no longer become more productive, so we become less productive per se. I don't think there's a line in the sand like that.
I go back to the Super Bowl of 2000. Do you remember it?
Was that?
I don't know.
The Rams?
I have no idea
and
who
Titans,
it was.
Maybe,
I just remember
99?
It was the year where all of the ads were all tech companies, and there was one particular ad that always sticks with me. It was kind of a take on who was the guy in the shower? Mother. The horror movie Bates Motel. It was the Bates Motel. It was a guy driving up to the Bates Motel. It's raining. He gets out of his car. He goes into the check-in area and he passes a pool and it's nasty. And he says to the lady at the registration, "Do you have any breakfast?" And she kind of points behind him, and there's like a half-eaten donut and a cup of coffee. And he says, "Well, do you have anything to do?" And she kind of points out to the pool, and there's like a tire floating in the pool. And he says, "Well, do you have any entertainment?" And she's smacking her lips with chewing gum. And she says, "Every movie ever made in the history of the world in any language." And the screen goes black, and it goes, "Quest." And now, 25 years later, you can get essentially every movie ever made in any language on demand. It only took 25 years.
And 12 streaming services.
Yeah. Maybe even more. It's just interesting, and some of my thought process is that the hype around artificial intelligence today may take longer than the market is pricing in. It may not. But it's the same type of hype around the internet and that Quest commercial from 2000 that really did take 20 years to go through. I don't know that artificial intelligence is going to take 20 years. I don't think it is. Yeah. I think productivity gains are already being felt across the region. The Challenger job report that I mentioned earlier, one of the citations that they put in there is that they thought a lot of those job cuts were done because of productivity gains being made by artificial intelligence and smarter software. So I don't know that it's going to take 25 years or 20 years, but I don't know that it's going to be next year either.
Yeah. And the productivity will be there, whether it comes in 2, 3, or 5 years, whatever. But will it exceed the expectations? Because that's what the market is going to look at. So whether we have a deflation or something in 5 or 10 years is going to depend on the extent. If what our calculations, you have analysts right now putting in what they think it's going to do to the economy and to GDP, whether, they were too ambitious with their sort of targets or if they're spot on or below will sort of depend how long the party will go on in the market.
Yeah. You mentioned inflation. As we get close to the end here, we didn't really talk about tariffs at all. So the tariff situation is now with the Supreme Court to decide the legality of tariffs.
Could get messy because it's looking like they're going to at least shoot it down on the current Emergency Authorization Act or whatever it was in the 70s.
Well, Gorsuch, that's not his name.
Gorsuch.
Gorsuch came out and he called it a tax on Americans. Chief Justice Roberts said that it puts too much power in the president. And to me, it seems like there's a consolidation of power in the executive branch that was doled out in the Constitution to the elected officials,
Mhm.
right? Not just the executive branch, to tax and spend. And so it seems to me from a constitutional standpoint and from what they've already kind of espoused opinion wise and some of the back and forth between the attorneys and the justices, it may get reversed.
Yeah.
What happens then?
I think they're going to try and rationalize a different reasoning under one of the still allowable.
Yeah, but what are they going to do with all the tariffs that they've already collected?
They would have to, whichever ones they can't validate under the other sources, under the other laws, they would have to remit back to the importers, I guess. It would be messy. I'm sure they're going to try and find a loophole to get it listed under the other ones. So with the power Trump has, wouldn't he lean on Republicans to say, "We'll pass a law then. Give me that power," or you vote that power?
Wouldn't they still need 60 votes for that
to pass a bill? I don't think they need that to pass a regular bill. This is the 60 vote is CR. I think they would need simple majority, depending on. I'm not a civics specialist.
No, but if that gets reversed, I mean that'll be a major blow to the White House. It seems like a cluster to give the money back, although it could be positive for earnings.
You think it would? Yeah, it would help companies, I guess, who paid that. Yeah, one-time tax credit. You see them pop up in earnings, and they're insanely profitable.
Well, I mean, yeah,
Amazon and Walmart.
I don't think a one-time would really do anything for the stock price. I mean, it's not a repeatable process.
Yeah,
right?
But you see how a one-time tax bill charge hit Meta.
Yeah, they've gotten really hit over the last.
They're the cheapest Mag 7 right now.
Yeah,
PE basis, as we know, not perfect.
Not perfect. What do you have for us as we wrap up here?
Couple things. Okay. So November, the next 6 months starting in November, seasonally the strongest period for historical S&P 500 returns, averages 7% over that period. I think the win rate's 76%, and all the strongest periods all sort of float around December. So, but November, starting with November, it's the strongest period. Two other pieces. There was Goldman and Merrill Lynch CEOs who made headlines on Tuesday, actually, when the market had a rough day, saying, which is super vague, and I hate it. I just laughed at it, and I know you laugh at it too. You probably know what I'm talking about. They said basically we could definitely see a 10 to 20% pullback in the next 12 to 24 months. On average, every 1.6 years, you have a 10% pullback. Like, wow, thanks for that information, guys. But the headlines run with it as they do. But sort of piggybacking off of that, Michael Burry, again, getting headlines because he's going short Palantir and NVIDIA. So I saw he had like 66% of his portfolio in straight puts on Palantir, which he might be out of already. We don't know.
Yeah.
But and then 14% short on NVIDIA. And then Palantir's CEO blew him up for it. He's like, "Are you kidding me? You want to short chips? Are you kidding me?"
Well, I think the fact of the matter is, we don't know when he put it on. He might have said, "I don't know when he put it on." They are lower since that news came out.
Yeah,
I mean, he could have
sold already. Yeah,
he could have covered. You don't really know when people put that their trading information in public. You don't know, and you don't know what is he could have been short all year, and he just
lost tons of money,
and now he's going to make some money on one trade, but. Yeah, that's just one of those.
They said they were quoting like an early 2024 tweet, I think it was, where he was saying short the semiconductor stocks.
Yeah.
Like I'm surprised he even has any money left after that.
How'd that go for him?
Yeah, not well.
No, it didn't go very well.
Never get yourself worked up over a headline of what some hedge fund manager is doing. It's not worth it.
And on that note, I would just say, maybe we are going to have more volatility to the end of the year. You said, Santa rally, possibly, historically pretty strong. Maybe we are going to have more volatility. That's not a reason to become emotional and to alter your course. Whatever happens with tariffs, it's not going to really impact the market over a long period of time. At least I don't believe it is. Let's just not get emotional in all this. I think that's the key takeaway. Market's going to go down, they go up. Obviously Liberation Day, right? We were down almost 19%, and market's up 15.5% for the year. So let's not get emotional. Let's not bet against America. Everybody knows I always say that. And just try to keep your head on straight, right? Hey, for everybody at Good Life, thank you so much for listening to the Market Enthusiast. We will see you next time.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.